All right. For any businesses, big or small, credit is indispensable, without which normal operations are hampered. It has become imperative for the MSMEs to look for robust last mile options which can offer timely and affordable credit, which in turn aids the agenda of speedy and sustainable economic growth. Financial inclusion provides the widest access and eliminates barriers to financial services. Financial inclusion reduces liquidity barriers and encourages investment, thereby increasing output and the employment opportunities. To highlight the way forward, we are joined by an eminent panel of speakers to talk on enabling MSM growth through financial inclusion. Ladies and please join me in welcoming our speakers, Mr. Jay Gupta, Mittal, founder and CEO of Prest Loans, Mr. Nitin Sharma, CPO and MD, SME Business CredAble, Mr. Alok Mittal, co-founder and CEO, Indifi Technologies Private Limited, and Ms. Shweta Aprameya, CEO, Arthimpact Digital Loans. To take the session forward, I would like to call upon Mr. Thiru R, Chief Operating Officer, Kinara Capital. If you're ready, ladies and gentlemen, over to you.
Thank you so much, Sneha, for that brief introduction. Hello, audience. Welcome you all for this session, Enabling MSME Growth through Financial Inclusion. And I welcome the panelists, Mr. Ashok Mittal of Prest Loans, and then Mr. Alok Mittal, the co-founder and CEO of Indifi Technologies, Nitin Sharma, co-founder and for CredAble, and Prakash Gupta, founder Dhan, and Ms. Shweta, CEO of Arthimpact Digital Loans. It's a very esteemed panelist here, which we are going to discuss about this financial inclusion. We'll talk about more on the credit availability and the financial solutions for MSMEs, and we'll also cover a little bit on the other financial non-credit option for non-MSME, other customer segments which our panelists are working on. And also we will talk about the government initiatives, and also what are the initiatives, what is helping in MSMEs credit financial inclusion, and what could be the other options. And we will also more focus on the digital, the fintech thing, and also the digital interventions. Obviously, this COVID has made so much of impact on accelerating so much of digital interventions in so many companies. So we'll talk about a little bit on those aspects. We'll discuss a little bit on those aspects, and also particularly focusing on acquisition, and also the processing, and also about the different payment platforms which we have been talking about. So we'll cover all those aspects. So just to give a brief introduction about myself, I'm Thiru, CEO of Kinara Capital. We are fintech NBFC operating for the last 10 years in across 6 states of India. And we have kind of disbursed around 65,000 loans to small enterprises, more than around 2,700 crores, and we have an AUM of around 1,000 crores as of now. The kind of digital interventions, whatever as Kinara Capital we have been doing, also I will share in between during some of the questions or some of the responses from the different panel. So to start the panel, I would panel discussion, I would request each of the panelists to kind of introduce themselves in terms of what their organization does, focusing on the financial inclusion of small businesses or MSMEs, or as some of them, if we are working on financial services for non-MSME customers, if anything is there which you want to specifically mention, that also we can just share. So maybe I request each panelist to talk about their organization and their services focusing on financial inclusion. Maybe I would start with Mr. Alok Mittal of Indifi Technologies, and then I will go one by one in that order. Yeah, Mr. Alok.
Thank you, Thiru, and thanks for having me here. Indifi is a 6-year-old company. We are in the business of financing and helping finance micro and small businesses. Our typical customers are services sector customers, food restaurants, kirana stores, e-commerce sellers, and so on. We have served about 40,000 customers till date, with average ticket size of about 5 to 6 lakh rupees of credit facility to these customers, largely used either for working capital reasons or for growth of the business in terms of small capital investments. From an approach standpoint, about 40% of our customers come with no prior business loans. A similar number don't have any collateral to offer. We serve them purely through unsecured MSME loans. And the basis for doing this is that we have embedded ourselves into the ecosystems, digital ecosystems that they do business with. Right? So whether it is their payment acceptance mechanisms like swipe machines or UPI, or where they sell, in case of e-commerce sellers, that would be players like Amazon, Flipkart, or their independent web stores, or food delivery businesses. So the approach we have taken really is to go find where is it that these businesses are present and where is it that we can get incremental data about them if their bureau scores are not going to be available to us because these are new to credit or have very thin files. That information then allows us to wrap our arms around what level of business is the customer doing, how consistent are they, and hence be able to underwrite them without any on-ground interaction. So we are a zero branch model. We don't have any salespeople on the ground. We don't have any credit underwriting on the ground. And much of this is enabled through our partnerships and a fully digital stack that we built. Thiru, you are muted.
You're still mute. Okay.
Can you hear me now?
Yes.
Yeah.
Yeah. I mean, maybe please, Mr. Ashok Mittal, can you please take it forward? Yeah.
Yep. Hi everyone. First of all, thank you so much having me here, and it's a great pleasure to be with all of these people. So, the subject which is very, very close to my heart in terms of MSME and more importantly, growth of MSME. So Prest Loans is a brand name of a company, Lord Krishna Financial Services Limited. We are based out of Delhi. We provide credit to small ticket business people, whether they are into manufacturing or trading or services, whether they are B2B or B2C, and not necessarily having a very deep digital footprint. The loan which we provide are maybe secured as well as unsecured in nature. So secured means they might have some kind of collateral which helps them to have access to the credit faster. Now, the major difference when we look at servicing to MSME, sometimes many of them, especially when we talk about MSME and the first time, which is, let's say, micro credits. So these people sometimes do not have very strong data, whether related to GST or banking, but they might have some collateral which they are ready to offer. So in a sense, we enable them to take credit. Around 28-30% of the customers are the customer who are new to credit, NTC clients who do not have a prior credit history. But if I really see another 25-30% people who have a credit history, but that may be a consumer loan or gold loan where people would have not given them loan based on their financials or bank statement or business vintage. So those are the people where we kind of service them. Again, like Alok said, not necessarily that going by the credit bureau or in fact their, let's say, financials, but more importantly looking at their business model, etc. We also service to people at tier 2, tier 3 cities, especially more focused on other than Delhi, NCR, Rajasthan, Madhya Pradesh, Gujarat, etc. And especially in tier 3, 4. When it comes to financial inclusion, the whole idea is that also to service the people whose digital footprint or finances are not so strong. So bringing them into the mainstream, who has been borrowing money from, say, local money lenders, to provide them facility that not only they can take amounts which are smaller, but more importantly, pay amounts in smaller lots, which is like EMIs. Otherwise, when they borrow from private financiers or money lenders, they need to pay full amount in bulk, which they are not able to manage. So our idea is to bring them in the mainstream so that they take advantage of the various schemes or policies which are, let's say, supported by government. So that is where currently we are. I mean to say, MSME is our core area. That is the only thing which we do. Thank you. I guess Thiru.
Thank you, Mr. Ashok. Thank you. Yeah, is it audible now? Yeah.
Yep.
Yeah. Maybe I request Shweta, please, can you give a brief introduction about your organization and your work, and more focusing on the financial inclusion to SMEs?
Hi, good afternoon, everyone. Thanks a lot, Thiru and the organizing team. My name is Shweta Aprameya. I'm the founder CEO of Arth. We are a digital lending fintech. Our focus is largely on the micro MSMEs as well as the nano MSMEs, which largely mean that we are really working with the bottom of the pyramid enterprise ecosystem which exists in hyperlocal markets. We are a 3-year-old organization, very young. We have already done over 3 lakh small ticket working capital loans. We are present in almost 18,000 locations, which means that we have capability to reach customers in distant locations all across India. We run our business through a phygital model, which means we have partnerships both at a national level as well as hyperlocal level, which gives us the ability to really reach very large number of micro borrowers. We have a gender lens, which also means out of the 3 lakh customers, we have 35,000 women borrowers who are setting up nano and micro businesses. And at the moment, our focus is really understanding the occupational data of many of these nano and micro enterprises and have the ability to really offer credit to non-digitized micro MSMEs. And I think that's something, an area that Arth is working on. We are a team based out of Gurgaon. We have a small team in Bombay as well. And we are, as I said, working on both technology and distribution capability. We work as a fintech, but we do feel as an organization that we need presence. And I think working in the sector of financial inclusion for last 16 years, we still believe that there is a need to be present at hyperlocal micro markets. And henceforth, we are setting up small satellite offices in these locations to reach out to these kind of customers. Thank you, Thiru.
Great. Good to hear, Shweta, about your organization and the focus on the women related focus. That is very good to hear, and that's what I think which is a main focus area for different organization. So now I request Mr. Jai Prakash to give his view, and then I will come to Nitin. Yeah, Jai Prakash.
Hi, good afternoon, Thiru, and thank you to the organizing team for inviting me over here. So I'm Jai Prakash. I am founder of Dhan. So we are a technology-led investing and trading platform. So our way of contributing to financial inclusion is not through the MSME and lending side, but rather creating an ecosystem where a large population of the country can also be financially literate, and they should be able to invest in financial assets through a well-informed tool which we are planning to build. So our idea is to acquire at least 1 million customers in next 15 months. And once we have that kind of base, we also want to empower them by also providing a lending facility to them. So the journey has started in August, and the things are going strong as of now. So we hope that there is a lot of things which can be done to the rural population, tier 2, tier 3 population, where they should be they should have that know-how of understanding how the financial assets work and to be invested, rather than getting swayed by lucrative offers being provided locally, which end up being a nightmarish situation for those innocent people. So that's it from my side. Looking forward for a great interaction over the next 1 hour.
Yeah, thank you, Mr. Jayaprakash, on giving a different perspective on the financial services, particularly non-credit, but mostly from a savings perspective and creating assets perspective for the rural segment particularly. That's a different view. We can talk more about that. Now I request Mr. Nitin Sharma from CredAble to give a brief introduction about his organization and the products that they offer.
Yeah, thanks, Thiru. I head product and technology at CredAble. At the same time, I also look at the SMB business. CredAble is a 4-year-old company, and we are primarily focused on working capital finance as solutions. We have technology platforms which are segmented into broadly two kind of customers. One is the enterprise side, and the second one is SMBs directly. So on the enterprise side, we have a platform which integrates directly into the ERP systems of large corporate anchors. And through that, we run supply chain financing programs for their suppliers and dealer retailers. Now, the speciality for this particular platform is the size or the credit worthiness of these suppliers and dealer retailers do not matter in such kind of a program, because most of the credit call is then taken on the corporate anchor that we are working with. And we have close to 25 plus lenders onto that particular platform, which are funding large volumes as of today. So we last month itself, we did close to about 3,000 crores of transactions processing through that particular platform itself. The second segment where we work directly with the SMBs is a platform called as Upscale. And this is a platform which gives credit and cash flow management capabilities to small and medium businesses, and would offer products like term loans, OD, sales invoice discounting directly by taking a call on an individual borrower. But at the same time, we give them a lot of tools through which they can optimize their overall cash flow management practices, so that they know, I think, when and how much would they require credit in the coming times. So that's largely, I think, in terms of the technology play that we have. We also have our subsidiary, which is a non-banking financing company, which also participates as a risk participation with our other partner lenders.
Mm-hmm.
Thank you.
Great. Thank you all. Thank you for the brief introduction about the organization and the kind of products you offer, the kind of different models you have. So maybe I'll just have basically the session focusing more on the credit availability and different financial solutions for the SMEs or MSMEs in particular. So maybe I would want to start the questions about the government intervention which we have in this MSME sector. So maybe I'll pose these questions to Mr. Alok Mittal of Indifi. So as you know very well, like there are several measures have been taken in the recent times by the government organization and by the different industry experts to focus more on how do we get more credit into the MSME sector, particularly during this COVID time and also pre-COVID time. There were different schemes, and during COVID we have seen all the ECLGS loans and all those kind of guarantee schemes also we have seen. So what, according to you think will be the most viable credit options considering the current situation, the post-COVID situation? But still we are not fully out of COVID. This Omicron is all kind of coming in. But having said that, apart from that, if you see, what are the different credit options you think the government has given, and what could be the other options from your perspective?
Yeah. Clearly there have been a lot of schemes that have been extended, right? The ECLGS and the TLTRO Trinity, if you will, were the two most significant ones, but there have been others on a sectoral basis as well. I think the constraint in many of these has been that these financing schemes have not really reached the new and upcoming digital lending platforms. and hence have remained confined to borrowers who already had access to bank financing. Some of this limitation has been around, the overall pricing caps that have existed around the end customer pricing for these loans. Some of them are linked to the credit rating of companies like ours, given that we ourselves have been in business only for 5 to 6 years. But I think there is a solution that is required for capital to flow through these innovative mechanisms. One of the windows of opportunity that we see is, since data is getting more organized, the classical wholesale lending where a lender lends to an NBFC for onward lending and by and large is limited to seeing data on a low frequency basis, on an aggregate basis. Now there is technology available whereby the lenders can actually lend straight through by using these platforms and hence truly understand the underlying risk and performance of the portfolio on a day-to-day basis. So I think that is creating a window of opportunity where risk can be assessed more accurately in the wholesale lending business, and is providing an opportunity where digital lending platforms like many of us represent here on the panel can effectively transmit the government's intent and policy to small business borrowers. The one place where I think the initiatives that government has taken, the regulator has taken, and reinforced by the private sector has been around public digital infrastructure, and I think that is clearly a space where India is outshining all other countries today. Right? It started out with the JAM Trinity, but now with the launch of account aggregator and the upcoming open credit network systems, it has become really easy to create these digital platforms, digital workflows, reduce the operating cost, and hence be able to take out credit to many more MSMEs than was possible earlier. So I think the infrastructure has been put in place. There's some great work that has been done there, but it remains constrained for availability of capital to those who are truly utilizing these infrastructure elements to extend the reach and availability for small businesses.
Right. Thanks, Mr. Alok. I mean, it's right. As you said, the infrastructure is in place, even whether the account aggregator or even for that matter, the UPI transactions, which we see on a regular basis, all those things. And even for that matter, from your, the India has done a kind of a leapfrog in that kind of technology. For that matter, take the COVID app, which has been kind of leapfrog. So truly that infrastructure is in place is one thing, but as you said, the kind of schemes which has been introduced has not been able to reach the right population. That is one thing. So what do you think, Mr. Ashok, about this? What do you think about and particularly the schemes which is available but not able to reach, and also your thoughts on the account aggregator and all the other infrastructure related?
Thanks, Thiru. In fact, I would like to start from where Alok has left. I think the entire infrastructure which has been created, and a lot of people are talking about that, and they, I think, assume that the moment this data is analyzed and understood, and you are providing loans to MSMEs, that is the financial inclusion. What is financial inclusion? Is it like providing loans to them? Is it providing finance to them? That's it? I think not. I have met a lot of people who know these government policies but do not know how to use it. Now, I'll take one example. We met a lot of clients who have got GST registration, but they don't even know how to file GST. They're taken registration, that's it, because somebody told them GST registration is must for taking loan. Similarly, let us say how many of them are registered for Aadhaar Udyam registration, right? Not many. So they are getting registered only because somebody tells them, okay, this is necessary for taking the loan. So lot many things, these, and I'm just representing micro of MSME, right? I'm not into SME. So they do not know this. I think financial inclusion is more about educating them why they should get registered for one particular service which is given by the government, and how they should really use it for the growth of their business, not for loan. Because ideally, although it is a conflicting statement that all of us are lenders and we want our book to grow and we want to lend money, but ideally we should empower them not to take loan. Be self-sustainable. Take the loan only when your margins are higher than the rate of interest which you pay and you are looking to grow. this whole topic here is enabling MSME growth through financial inclusion. So we should look how MSME will grow. So my micro customer has to become small, small has to become big, right? Medium, and medium has to become bigger. That is where we should really focus, and that is how our book should increase. So the whole financial inclusion has to change. The way government has changed the entire definition of MSME, the way we are those people. Trust me on this. These database, when we look at, let us say, when I say, okay, I am going to give you loan based on bank statement analysis, I am giving you loan based on GST, I am going to give you loan based on so and so. How many of them are really able to do it? You just leave top 20 country, top 20 cities in the country, right? Then so we need to tell them really that this particular thing is not just for the loan, but for your growth of your business. We actually conducted certain, I will say, seminars, not really webinars, but to tell them why they should apply for GST and why they should really look to file GST. Because the more GST you really file, automatically people will come to you and give the loan whatever you need. But take loan only for growth of your business, not for no other purposes. So that is one important thing. Second is, I think, which Alok touched, that from government initiative perspective, yes, the whole focus always remains on rating, on vintage, on profitability, etc. So the more focus on that, that means everybody will look for profitability and not for servicing the customer. Similarly, you have asked me about account aggregator format. So let us see how much information we are able to get on this, because I have little concern on the data privacy. The more number of data when we give to people, other than the larger players and extremely tech-enabled companies, most of those, let's say, when we consider other than the top 200, 350 companies, there are another 9,000, right? So out of 9,000, there are maybe 1,000 active at a small scale business. Their technology is not really so strong where they can protect the data of the customer. So I mean, to some extent, the financial inclusion will also be part where we are able to tell them that how they need to protect their own data when they apply for loan and all. You apply for one loan, immediately you get 10 more people calling you for the loan. So that means somewhere the data is getting leaked.
Yeah, that's
all
true.
There will be the financial inclusion in my view. Little different, but I think this is how I think on this.
No, I mean, your view is really interesting. I mean, as you said, like when we make people more formal, then then whether the question is whether the data is being kind of shared to so many people, whether it to credit bureaus or different aggregators, or so that's an interesting view. But before I go to the fintech related discussions with Shweta and Nitin, I just want to get the view from Jai Prakash from his perspective, because it's not only about lending. So I want to understand from you, from Dhan perspective, on what are the government schemes or interventions which has helped you in kind of fostering this your definition of financial inclusion from a non-credit perspective. Any quick comments on that?
Yeah, Thiru, see, we fall under a different regulator, which is SEBI, right? So which has got a different way of looking into how this financial inclusion, financial literacy works. But just to extend to both the Mittal's point of view, I fully agree that the financial inclusion cannot be achieved unless there is financial literacy, right? So we also come across a lot of people who are our clients, but they also own SMEs and MSMEs. For them, as Mr. Ashok Mittal rightly pointed out, that out of the top 20-25 cities, if you go deep down, there is still that kind of apprehension that how I should use the different kind of initiatives given by the government. So they always try to rely on a third party who could help them out, in terms of arranging loans for them. So, as we go more deeper, we try to take initiatives on, making the people literate, making MSME literate about the kind of opportunities they have. That will be a true financial inclusion in my sense. And also fintech also has a greater role to play in this, because there are a lot of areas where, traditional banks or any institution whose objective is to make some kind of a mode, some kind of interest spread, they would not touch upon that kind of lending. But when you talk of inclusion, so these SMEs MSMEs also need to be uplifted, right? So for them, there has to be a thin line which you do not compromise on your business profitability. Also, you should take care of bringing that downtrodden up in the mainstream, so that you can reap advantage once they are in the mainstream in years to come.
Right. Yeah. I mean, that from that perspective, you are right. Like, we need to kind of little bit do non-financial related activities, in the sense, financial literacy kind of activity, to give them more information on what is good for them, what is right for them, to get to a kind of a true financial inclusion. So, I mean, I'll just move on from this kind of a government scheme. I'll just move on to Shweta about her experience on what are the key challenges you think in lending to these MSMEs, and what are the challenges which you face as a fintech from your experience. If you can a little bit share about that.
Thanks, Thiru, and wonderful thoughts by all the panelists. I think Alok, Ashok ji, and Jay on information access, I would say. The way, and of course, financial institution is a much broader umbrella, and we can talk endlessly about problems that we face as far as targeting the segment. In the context of Earth, because we are focused on nano and micro, I think we see challenges which are perhaps those which cannot be addressed in 1 year, 2 year, even with the best of technology. I think we will have to work with those challenges. One is distribution cost is always going to be high. And I think this is something that, as companies who are innovating for this segment will have to work with. And we can't expect that this customer will suddenly change, become super empowered, and will start doing everything themselves. And henceforth, my distribution cost and my cost of acquiring this customer will go down. I think we'll have to work with this challenge. So I see this as a first challenge, and also to an extent a hindrance why the larger financial institutions have not been able to address this segment, and perhaps will continue to work with intermediaries and will have fintechs like us focusing on the segment to innovate on distribution cost. The second, of course, is the data is unstructured. And one more thing, which I believe is a problem that cannot be solved very quickly, and we will have to work with this unstructured data and figure out ways to make it more meaningful and relevant in the context of giving access to financial services, whether it is the credit side, the asset side, or the liability side of products. And I feel that because of these two rather age-old challenges, we have seen a large number of people remain excluded from financial services. It's not just the micro MSMEs, but largely most people. We in Earth are actually working towards really solving this problem, and our theory of change really works with this. To say that is really building just a platform the answer, or is really building branches the answer, or the centers, or sort of learning from FMCG, some sort of innovative distribution model. So we are, I would say, rather in an experimentation mode as far as distribution is concerned. And we are working with both models. We are trying to figure out a platform approach. And we are also working, as I mentioned earlier, as a satellite office model approach. Because we feel that data at some point will have to be captured to become more meaningful. And we will have to take this long path to really work on this process. Mm-hmm. And very rightly, as Ashok ji was saying, that they hear about GST, but they really don't know what is the utility of GST. And I think organizations like us have taken the call that we are going to work towards really understanding the distribution issue as well as the data issue, and work with the customer to bring them into our network. Is the approach that we are taking. The second thing which I feel, Thiru, which is I think a systemic issue, I think, is that this MSME is such a broad umbrella, right? We just heard over this panel that we heard a loan size of 5 lakh, and I think somewhere Nitin was also mentioning the SMBs, which is what, 50 lakh or 50 crores? Sorry, I missed that number.
50 crores limit.
Yeah. Right. And I have a platform that works with as little as 100 rupees to 50,000 to a lakh. right? So imagine the spectrum of going from 100 rupees to 50 crores, right? And someone has to really sort of look at decoding the segmentation at a systemic level. So to your earlier question, where I see is a big challenge in the bigger institutions who are going to give us lines, fintechs like us, a line to then sort of onward lend, have to understand that the MSME has the micro, which is the largest segment, and their policies and procedures have to align with the micro segment. It cannot be one size fit all for the MSMEs. Even in the government framework, I think government did a lot of work over the last 2 years, especially during the pandemic. And the reason why a large part of that has not worked, because 95% of your micro MSMEs who are unorganized, non-digitized, with unstructured data, high cost of distribution, were really not addressed through those schemes, because nobody is saying, okay, there is something different that I need to do for the micro. The banks have to take a different approach for the micro. I think one good scheme we all heard about it, but again, it was more like public sector driven, which was PM Sabnidhi Yojana for registered vendors. And of course, we know every time that comes as a mandate, what happens if something comes as a mandate and not as an organic process, right? But I personally feel these are three challenges which fintechs like us need to work on. Systemic issues of segmenting micro from the big MSME framework. Second is solving for distribution cost. And third is really working with unstructured data.
Right. Yeah, that's a very clear view on the OPEX, and then the data, unstructured data, and the systemic issue. In one of the a week before, I was in a panel, and then there was a opinion poll running side by side asking about whether we need to create a different nano enterprise as a separate legal entity, like micro, small, MSME, and the majority of the people said yes, we need to recognize, because that nano is one thing which you also pointed out. That's a systemic segmenting issues which are also. So I would just move to Nitin. So what do you think about how this COVID has been like a game changer for most of us, and especially in the MSME segment, or the people working on the MSME segment, particularly when you talk about supply chain financing or the bill discounting or all those things. So what is your experience on how this COVID has changed the way you, or is it the same, or is it the way you have worked before and during the COVID, how you have to kind of, whether you have to more digitize the way you are doing, or you have to change or tweak your model, something like that. So can you talk a little bit on your experience on this pre-COVID, post-COVID era on digitizing your business models?
Sure, Thiru. So I think COVID generally has been hard on all the MSMEs. I think a couple of days back, there was some report that was presented in Lok Sabha that about 9% of the MSMEs closed during this particular period. So generally, I think it has been really hard, both for MSMEs. At the same time, the lenders also struggled in terms of managing their loans during that particular point in time. And then later, even now, we are seeing the impact. So what is happening is, whenever we receive a particular loan application for a particular MSME, the instances where we are seeing certain DPDs, that has actually gone up. Or instances where we are seeing loan restructuring has happened, that again has gone up. So what that basically does is, eventually that feeds into the overall turnaround time that you need to process a particular loan application. So although most of the digital players are working in terms of digitizing the overall process, making it as straight through as possible, but suddenly COVID hit us, and then now everybody is again trying to identify that how do we get additional information on these aspects now. Another thing that has happened on the lender side, what we have, because we work with a lot of partners, there is more adoption more adoption of anchor based programs now. So instead of taking a direct call on the MSME, a lot of lenders want to move to something like a supply chain finance program, which we were very working on prominently, but we saw a huge spike in that particular space. A lot of lenders are now getting onboarded our supply chain finance platform now. And even if they're not doing that, they're trying to lower the overall ticket size that they were earlier comfortable with. So if somebody is requesting, let's say, for a 20 lakh loan, they might only get a 7-8 lakh rupees at the moment. So that has also been seen. From our side, I think with all of this happening, and I totally second the thought that Ashok and Shweta put forward. Ashok was talking about. One, of course, awareness. There is a lot of lack of awareness with the MSMEs. Second,
Right.
Shweta talked a very important point, which was the unstructured data. But this unstructured data is something which creates a lot of information asymmetry between the lenders and the borrowers. And this exactly is what we are trying to solve with our upscale platform, wherein we are trying to give MSMEs a platform which they can use to increase their overall awareness, manage their cash flows in a better manner. So it should not hit them as a shock anytime they want a loan and their credit score is really bad. They want a loan, they've not filed their GST for last 3-4 months, or they had certain, let's say, check bounces in their bank statements. So we are
Right.
creating that level of awareness right from the beginning for these MSMEs through the platform. Yeah, so that's
Right.
it. I think. But last point I wanted to add to that was, so I think more technological innovations might be required here. And like Shweta mentioned, that it may be a long journey, but I believe it would be a mutual responsibility that we keep on innovating, we keep on trying new things. One example I'll give you on upscale platform. What we have done recently is we started connecting to the accounting software of these MSMEs. It could be
Right.
Tally, Yoho,
Right.
etc. And through
Right.
that, we pull a lot of information, basis consent, if they want to apply for a loan. And there have been several instances where a particular person wanted a term loan for, let's say, 50 lakh rupees.
So
We found that maybe such a large such a large tenor is something which partners were not comfortable with, let's say 12
right.
months or 18 months. But looking at their customer list and what kind of billings they were doing with them, we could actually offer them an alternate solution to sales invoice discounting.
Right.
So this is something which is coming out as those innovations. Now,
Right.
initial adoption might be, I think it might take a time, but I think it's worth experimenting with these technologies right now.
Yeah, that's interesting. I mean, when you talk about this upscale, the platform, and but Ashok ji might say that whether we are compromising on the data privacy of the customers or the MSMEs. So that's the challenge between having unstructured data on one side when we make it for. So that's why it's making more kind of interesting this segment. So yeah, I mean maybe I mean, any perspective from any of the panelists who are more involved on the digital payment solutions? Maybe Mr. Alok or Ashok, whoever has been doing this, from a digital payment solution. How this actually the payment platforms are becoming more accessible to MSMEs, whether it's a cash-based MSMEs or a more informal invoiced banking MSMEs. How does we see these digital payment platforms coming into picture?
Yeah,
Yeah.
one of the things that we are seeing, Thiru, is on the consumer side, UPI has taken off fairly strongly, and we see this not just in large cities but also in smaller towns. So that footprint is going up. It is still a minority of the overall cash flows of a business, right? So it's not at a 30-40% level. We are seeing 10 to 20% of the payments beginning to pass through the UPI interface. But that beginning has happened, and we are beginning to draw some signals on the creditworthiness and the stability of the business through those. So I think we will not, from a credit standpoint, we will not need to get to a point where this needs to be at 80-90%. Right. Even a 25-30% penetration starts to bring in useful insights. The notion of payments itself being a method of financial inclusion is, I think, requires better solutions, right? Every transaction passing through the bank statement is not necessarily the most efficient way for small businesses, micro businesses to conduct their business, right? So even from a credit standpoint, there is this conceptualization of daily credit, right? So, where Rajni takes credit in the morning and gives back in the evening, interestingly enough, Rajni knows how to manage the credit at night. So I think we have to come down to suitability of a particular product rather than necessarily chasing technology, for itself.
So you're talking more about the cash, the people who are more informal, where their revenue doesn't come into bank or payment wallet, or you're referring to those informal businesses?
No, I think this second point that I made around the credit, what should be the frequency and what is the suitability design, actually is relevant for many cash-oriented businesses, but also businesses that are slightly larger and may have significant part of their cash flows reflected in banking.
Okay.
Right. So, for example, we have tested out these daily credit kind of mechanism. And one of the things that we continuously hear back from micro businesses, right, even our 5 lakh rupee customer, is that that's not convenient for them, right? This notion of accounting for when do I have to pay how much, and that amount and that date can change continuously, is not something that is easy for them to manage. So many of them have told us they're actually better, they prefer a product where there is a fixed date of payment. And for about half of our customers, we actually deduct their EMIs on a daily basis. So it's not an equal monthly installment, but really bite-sized repayments. But there is a final defined date on which that settlement happens. Right. So those kind of mechanisms are things that they've expressed a preference for as against a rolling line, even if the rolling line is more efficient from a overall cost standpoint.
Right.
The big area where we're finding gaps is in B2b payments, right? Those workflows are still very, very primitive.
Right.
Not enough has been done even for micro businesses. So I think there is the kind of the missing middle there. For large businesses, ERP systems take care of those payment workflows. But for much of the micro, and I would say even for the small business segment, business payment workflows are still very broken. I think there's a significant opportunity in addressing that.
Okay. Yeah, that's really interesting. I mean, what is your view, Mr. Ashok, on this payment solutions, and also combined with this COVID pandemic? What has been your learning experience on those things? Yeah, please.
So, Thiru, I think the payment mechanism, the entire digital payment mechanism, is the real revolution which has happened. So now you can see all micro, nano, ultra micro, whatever you call them, people using payments which are digital payments through various channels, whatever are being offered. But what I've seen a new trend, maybe in the last few years only, all the payment gateway platforms also start to look at the data, whatever in terms of daily payments are coming to those people. And what I see, which is happening now, is gradually the payment getting converged with the lending. Because when you look at the more data in terms of what receipts they have, what kind of receipts they have, what is the frequency, you also get the average ticket size of the payment size, etc. So you get whole lot of bunch, right? How many people have paid, etc. So it's entirely digital. And even if it, like Alok said, even if it is 20-25%, it gives you a fair sense that how this customer is behaving. But interestingly, it does not stop only at payment or something related to payment. Ultimately, it is getting into lending. So whether those companies directly do it, indirectly do it, and the only thing they have is payment. Since the payment routes through them, they have little control on the money. So if there is a lending, they can deduct the money before passing on the entire money to the micro lender. Again, I have a little concern on that the lending rates which these payment gateways or payment companies have are exorbitantly high. So instead of what are they really making them financially strong or bringing them in the financial system? I guess no, because all those people who are using payment gateways, they are slightly better off than the people who are not using it or not financially literate. So they have access to credit otherwise also, because if you get payments digitally, then your bank statement is better. It shows you real banking transaction based on which your company, my company, Alok's, everybody's company will be able to analyze and give credit to them.
Right.
How it is really helping him, that is very important point. However, that has really happened. Again, because of COVID, unfortunately, but this payment has increased on the digital side, which has given access to a lot more people to understand the cash flows and also to use it. But another thing is, which I see on a daily basis when we go to the market and go to some shops. I'm not saying about the branded shops, but normal shops. You will see their payment channels keep changing. So somebody is using Paytm, then he started using rupees, then he started using some other channel. So it keeps changing. So lending just based on one particular payment gateway system may be slightly risky, because that payment gateway system might stop sometime. So while it is good to analyze it, but depending only on that and giving credit based on that may be a little risky.
Right. Right. I mean, I was looking at the question answers, and there are some questions.
Okay.
So I was just trying to manage the time. Also, we have around 6 minutes, I think. So maybe I'll ask the
Thiru, we
some.
have 1 minute. I want to speak on one particular point on the credit availability. You have a question. Means one point.
Sure, sure.
Availability.
Please go ahead. Please go ahead, Mr. Ashok.
So my only point, which Alok in between has touched, was the availability of credit. Somehow the whole system, whether it is a retail customer or NBFC companies, is based on certain financial parameters. So people will look how you are rated. So you will see which companies have defaulted, maybe the top rated companies. So the dependence on rating is extremely high for banks, right? So they look at what is your rating, what is your vintage, what is your profitability. I think last 1-2 years we have also seen some frauds happening, and they had some 5, 6, 10, 20 lenders, right? So somewhere there is a gap. I think the real sense in terms of who are people running the company, their professionalism, their etiquettes, their processes, their policies, are, or to what kind of customer they service, are getting missed. So whether it is from bank to NBFC, whether it is bank to even a retail customer, I think it is very important to see who is the, let's say, owner, promoter, proprietor, and how he is running the business. This qualitative parameter is missing in the entire lending system, which need to be brought in.
No, that's a very valid point. I can see the other panelists also kind of accepting to your viewpoints. So, see, there is one question. Maybe I will just pose that to Jai Prakash, which is related to how some people are asking. I will just combine 2-3 questions. Is about how do we make ourselves more empowered in terms of financial knowledge. So they're asking, is there any way we can get those knowledge or the data points? So do you have any viewpoints on that, Jay Prakash? Quick, any referral points on that?
I think we keep on conducting a lot of financial awareness, financial programs. So if anybody is interested, can get in touch with us at Dhan. So that's one way of. Just Thiru, if you may allow, hearing Mr. Ashok Mittal, I have just one insight into this. If you may allow for a minute.
Yeah, please go ahead. Yeah. Is it a question to Mr. Ashok?
No, I think that there is some insight which I need to put here. Is
please, maybe we can take 30 seconds for that. Yeah.
Yeah. So we are talking more from a lender to a individual perspective. When we talk of financial inclusion for MSMEs, I think we also need to look at the duration of the loan, the duration of the lending which a fintech or a lender does for NBFCs. There can be a requirement where a small SME has to pay for the salaries, right? And he knows that on first, if he has to pay salary, on 10th, he is going to have his receivables coming in his bank. So what about arranging something for 10 days where if that sort of things can be worked out, I think there should be some scope for, the products where, a lot of innovations can be brought in.
True. I think, definitely, after the panel discussion also, you can connect with Ashok and get to more insights about thought process. So I would want to pose this question. Somebody is asking, maybe Shweta, you can answer it. Maybe Sneha is also here. We'll wrap it up in 2-3 minutes, if you don't mind.
It's all right. I want you to take up the questions. I wanted to actually tell you that please take up the question. There's also Arvind Noel who has some sort of an issue that he wants a clear advice on. So if you would please take the time to actually take up the audience questions.
Exactly, that's right. So see, the question is more about, there are 2-3 questions. I'll just combine 1 or 2 questions. Is what are the different ways they're asking for how I can get unsecured loans without any collateral for a startup organization. So we are talking about MSMEs already existing. So the question is about how do I get unsecured loan for a startup? So maybe Shweta, if you can throw some light on it. Or
okay, so Thiru, thanks, and thanks to the person who's asked this very relevant question. And I should say I was asking this question myself 3 years back. So I'm no different than how you are. I would say that the whole process really is simple. Really putting your thought to paper, putting your storyboard there, and then you have companies like us who are very interested in supporting the micro entrepreneur or someone who's wanting to start up the business the first time. There are several organizations that can be reached out, whether it is through the centers. We have centers in UP. We have some centers in Haryana as well. You can reach out to our centers and submit your proposal. We basically ask very, very simple questions like your some background about yourself, what you want to do. Just tell us a little bit about your financial history. If you've never taken a loan, if you've taken a loan, it doesn't matter to us. We don't check bureaus, very, very important information. And I'm sure Ashokji will be very happy. We don't check bureaus. We don't believe in CIBIL scores. We think CIBIL scores is a surrogate. They're not a decision point. And very, very important is we really focus on what you want to do and your capabilities and perhaps ideas in terms of how you want to project your business. So our model is really built on projection of your business and how your working capitals will happen in the future. Okay. We've identified certain occupations. So in very, very simple sort of response to you, if you're a startup entrepreneur, if you're a nano entrepreneur, micro entrepreneur, put up your storyboard. You can reach out to companies like us, which are fintech NBFCs. You can walk up to even the small finance banks with the storyboard. There are specific products which are available. You can get them both through centers as well as online applications. And Great. Don't worry about your bureau scores.
Great, that's really
there are companies that work without bureaus.
That's really encouraging. I think they might have got the right answer. So I want to ask this interesting question to Nitin actually, because he's into this supply chain financing. And so the questions is about the clients are saying that they have 45 days of payment terms, the cash flow to operate the business. But the problem is they are saying that 45 days payment terms is there and they don't get the payment on time. So during this time, what is the advice if I'm not able to get this cash flow on time? So how do I manage the cash flow? How do I manage my liabilities to pay to? So what is your advice for those people, Nitin?
I think there are two things here. I think what each individual should do. And one, the first point is around awareness. I've seen a lot of companies who have not registered themselves as MSMEs officially. Even if they have done that, they have not shared that certificate with their end customer. So if that certificate is not shared with the end customer, a lot of times it goes into those loopholes where they may even delay payments beyond 45 days. But if the certificate has been submitted, they are obligated to pay you within 45 days. So that's the first thing. The second thing is about, okay, let's assume that the customer is paying you in 45 days, but your working capital is locked. In that particular case, there are several companies now, even banks do it directly, or companies like us, we offer an invoice discounting solution, which is either backed by their end customer if they're working with a large customer, or it is backed by, or it is assessed basis the borrower's financial health as well. So then bill discounting or invoice discounting becomes another viable option through which you can actually get your capital unlocked and then put that for the business's growth.
Right. I think that's a bill discounting is a great option, and then MSME Udyoga, the registration to make it more. That's a very good thing. Maybe this last question I think is so that the audience doesn't feel like their question is missed. Is there any government business support or platform on payment gateways for MSMEs? So is that I think anybody can in the panelist, maybe Mr. Ashok, and then there is one more comment about. Financial education, what Mr. Mittal has talked about. So they want more concrete advice on MSME registration, GST, everything. So more related to government. So maybe Mr. Ashok, you can give the comment, and then I'll hand it over to Sneha.
So regarding payment gateway, government support, I'm not really very clear on this. I will leave it to Alok if he has some idea. But on the training part, I think it's a joint responsibility which everybody does. For example, I can give you one example. That for Udyog Aadhaar registration, we have a small video which we made, which is in 2-3 languages. So it helps people to how to apply for Udyam registration. A lot of people think that they don't know how to do it. It is government. It is very difficult, but it's not so difficult. So, and I have seen on most of the fintechs or digital platforms, they have small videos where it is easily explained how you can do things DIY, do it yourself, or learn them how to do it. In fact, in earlier some discussion, I was saying there are 3 V's, which is video, vernacular, and voice. So a lot of people are using those tools. And if you just glance through their website, a lot of education material is left. The only challenge is largely people depend on a third party to apply for a loan. If they do it yourself, then they will find that educative videos, content, blogs. A lot of people write blogs in terms of educating their customers. So this go through, they will learn. Thirdly, even if they ask any of the organization, I mean, from the lending perspective, that I want to learn this, I think most of the education have some mechanism or system to teach or educate their customers about some specific things so they can teach them. It's not really very expensive nowadays. It's free. Yeah.
So, Mr. Alok, anything on that payment gateway government setup or something like that? I mean, is there a...
Thiru, the question actually is not very clear to me.
That's what, I mean,
a lot of MSMEs are using payment mechanism, including online payment gateways, POS machines, UPI. So I'm not really clear on what the
I think that's what the question is about. There are any platform on payment gateways. I think that, as you said rightly, this UPI, all those things is what I think they're asking for. Maybe we need more clarity on that. Otherwise, I think I have covered all the questions. Thank you so much for everyone. So engaged and involved, the panel. I enjoyed and also learned a lot from you esteemed guys. Thank you so much, all of you. And over to you, Sneha.
Thank you so very much. Very enlightening this entire panel discussion has been. Thank you so very much to everybody who's been listening to us. And I see a lot of more questions popping up now. I must tell you that in the handout bag on the right-hand section, please download the speaker profiles. Make sure you get in touch with them. Just remember the solutions exist, as you see on the panel. Solutions exist. You just haven't found them yet. So work a little harder to find the solutions. And we have the wonderful panel here to guide you further. Thank you so very much, everybody.
Thank you very much. Thanks a lot.
Thank you.
Bye-bye.
Thanks, everyone.
Thank you.